Good morning. Well, excuse me. So this morning we're going to take a little bit of a different look at the markets rather than looking at the futures markets here. We're going to look at these ETFs. I'm going to take a look at some market internals and breadth and a little overview of where I think this market is at, where it might go here. It's been kind of choppy, depending on the market you're looking at. But yesterday we had these transports having a great day, in part by FedEx, which we'll take a look at reported earnings. Interesting, it was gapping down pre-market, and just before the open, it regained. We'll take a look. It regained where it was the prior day, and then it took off from there. So we've got the S&Ps here. They've been going sideways up in this area, and we got this bottoming tail bar going over on from yesterday after prices sold off on the FOMC news. They came back, and so these pictures, and I call them pictures, these charts here, are suggestive that by the breakout, and that's what we're looking to do. On the S&Ps here, if they can trade above this level here. Now, my thinking is either it's going to be a blow off here to the upside, could be, or is this going to be a breakout failure? Honestly, who can really know? But we look at these patterns, we have to go with them, and this pattern suggests to go higher. Now, this gap down is a little misleading because of the ex-dividend date, but we'll take a look at something else and clarify that. So idea is, can these break out above these levels? And just technically looking at the prices, you buy the breakout based on the bottoming tail and the sideways consolidation. The transports have come back from a breakdown, and here's a failed breakdown. You can see where, okay, it's not going to be a straight line, but broke down under this level and immediately reversed back up again. So there's a pattern to be aware of when it happens, because shorts get caught, and that buying will drive prices higher, and then it's typical to drive up toward the next resistance, but this one had the shallow pullback and continued higher, and the next resistance area is right up here. So can it blast through it? This move here would suggest yes. The Russell here, this is what I call a measured move, whereas you have prices running up into an area of resistance. It's a deep retracement, nothing to do with Fibonacci's. You've heard me say that before. That's the holy grail, hocus pocus type of analysis. Well, it's just some common sense. The further prices retrace from a swing high, from that swing low, the more bullish it is, because this is, being able to negate the downtrend. It's bullish in a higher time frame, the depth of retracement. So here you get the shallow pullback, and then you typically get a move equal that of the prior move. And it usually ends up right into a resistance area, which this did. So my thinking is here, all right, I'm interested in buying this breakout. However, the transports and the Russell are going to run right up into this resistance area here. So as we look at these intermarket relationships to try and determine the best odds, it's not always crystal clear as when things start lining up at a lower level, and then they go higher together, whereas you've got these divergences between markets, which can be confusing. But we go with the patterns at hand. Now, let's take a look at some of the flies in the ointment here. We've got, this is short-term sentiment, day to day. It's very whippy and erratic, but it's something to pay attention to as a day trader. So what this is telling us is that there's a lot of option traders now betting on the market going higher, and then to profit from that. So based on the patterns that we just looked at, we can obviously agree on that. If they break out above those highs, that makes sense. But when you've got too many traders in agreement or trying to profit from it, sometimes it puts a lid on that for a couple of days. So we'll see. It's not like it's super bearish, but day to day, it's something to pay attention to. Now, here's the cash S&P, and we've got this bottoming tail bar here. It looks a lot different than the spiders do, because it doesn't reflect that ex-dividend date. Nonetheless, you've got 3 days here going sideways. And this was bullish, this consolidation, then push higher. Now we got a bottoming tail. Tells that there is demand and buyers lurking underneath. That being said, if it trades under 24.91, look for it to go to minor support and possibly further. We take it day to day and, put it together. Now, let's take a look at something a little bit more intermediate to long term. And we got two opposing pieces of information here. One is the intermediate term sentiment says, hey, there's still fuel in the tank here to push these S&Ps higher, even though on the short term we've got sentiment a little bearish. That might cause a little bit of a gyrations, but we still got fuel in the tank before we get to a bearish level. However, breadth is at a bearish level. In the last few days, you can see that it's been waning, but that's normal, during a consolidation here. Now, the last thing we're going to take a look at is this breadth. Give me a second here. From a longer term point of view, and attach. I can bring this over here. Looks like I'm not going to be able to. Hold on. There we go. All right. What I can get here on the screen. Longer term, this has reached an extreme, and, back when it came down deeply earlier, I was kind of hoping the market would correct further. It didn't happen. Sometimes you have your ideal scenarios, and whether they don't always work out. But that would have been a great buying opportunity had prices come down deeper during that correction, and they didn't. So, as mentioned, you got these divergences between those broader markets. We've got breadth. It's not an agreement yet, but if we get the push higher, sentiment and breadth would come into alignment, and we then look for a short-term sell signal. So that's where things are at there. But before we run, I just want to take a look at Federal Express, because this looks great, for potentially going even higher. Look at the rounding bottom here. The earnings came out. It was, like I said, it was lower pre-market, came back pre-market, wide range bar. Volume, it backed off a little at the end of the day, but it still looks great. New all-time highs, nothing to stop it. So I would like to buy this on any pullback, possibly even today into this range. And as long as it stays, my rule is as long as it stays above the middle of that wide range bar, everything's okay. We'll see how that all plays out. Good trading, everyone. We'll talk tomorrow.